I draw the attention of the House my entry in the Register of Members' interests. I'm also a science graduate, like two of the previous speakers. I don't compare myself with the most famous science graduate on this side of the House, I have to say. But I had intended to make my speech essentially about science and technology because it's massively important. And because, as she herself, the Honourable Lady who spoke for the opposition, pointed out, we have fantastic competitive advantages here, and that will be a major part of growth. But since last Tuesday, in fact starting on Tuesday, dramatic events have unfolded in the banking sector, particularly over the weekend. And back in 2009-10, Lord McFall, then the chairman of the Select Committee, the Treasury Select Committee, asked me to chair the Future of Banking Commission. And it's unfortunately drawn back some memories in the last week. In particular, one of the characteristic problems of the banking sector is its very short memory, particularly when it's Wall Street we're talking about. So I hope the House will indulge me if I remind them of the lessons of the major banking crashes in the last half century. Back in 1933, after the Great Depression, the Americans passed Glass-Steagall, an act which separated banks out into risky investment banks and straightforward commercial banks. That gave us about 7 decades of stability until 1999, when President Clinton, under pressure from unwise and greedy Wall Street lobbyists, essentially removed Glass-Steagall. What followed was the collapse of several banks in 2008 and the great crisis we saw there, including Lehman Brothers, probably precipitated by the new mark-to-market rules. In 2009, because of the crash, we had Dodd-Franks in America, requiring banks with over $50 billion in assets to be subject to very tight regulation. Again, in 2019, under pressure from Wall Street, President Trump relaxed those regulations. Now, I talk about Wall Street because actually the whole world followed them. What happened then, of course, after the relaxation, was banks assumed they had an infinite period of low interest rates, and so they could borrow ad nauseam. So when global interest rates sharply increased by 3 or 4 or 5 times, the shock destabilized a number of those banks. And one such bank was Silicon Valley Bank, one that had been taken out of regulation by the Trump changes. So there is a lesson for us in all of that. But what it's caused is an instability in the financial system. Chancellors, central bank governors, financial secretaries in the states, regulators have no choice but to claim the system is robust. I am not so sure. We won't know for a while whether it's actually so. And that's because of the complexity of the system. Each of the 3 banks that have failed so far, the 3 major banks, have failed for different reasons. And we have no clear insight into what risks other banks have taken, partly because of the deregulation under Trump and his predecessors. And actually, in this respect, we in this country are probably in a better place than either the Americans or the Europeans. But I'm keeping my fingers crossed when I say that, because it's tempting fate. But one lesson we can learn, or one lesson we should look to learn, is that one of the big issues that the world is hanging on at the moment is that the Credit Suisse takeover by UBS is going to be successful. And I draw people's minds back to Lloyd's taking over HBOS, which was done under pressure from the government of the day, under pressure from Gordon Brown, and then Lloyd's themselves nearly collapsing in the very next year, and I'm hoping UBS won't do the same. But what the point of this story is that we are in a period of extraordinary global financial instability. Now, I am a low-tax Tory. I would have loved the Chancellor to have had a lower tax strategy. But I have to say that the events of the last week have demonstrated that a very small c conservative strategy is actually wise under these circumstances. The more the confidence of the markets in the government, the better our prospects for the future. That being said, I would be completely unsurprised if we have to have another budget in the autumn because of the nature of the transitions and changes that are now happening. And if that happens, I would say to the Chancellor, then could you please look again at bringing back your super deduction, because that will attract investment here in a way that won't happen with a 25% rate? Will you look at doing away with IR35 and other concerns that will improve the prospects for small businesses?
Yeah.
Because in my view, it's going to be incredibly difficult for the banks to get that balance between inflation and growth right now that their hands are tied by the instability of the banking sector. And so my one line to the Chancellor is, please look for the next budget at much more growth.
Yeah.